Hey guys, Corey Wyatt here, the Coastal Agent. Hey, I'm sure you're seeing it all over the news headlines. Real estate markets across the nation are beginning to show signs of cooling. San Diego, are we in a cooling market right now? I mean, we've been running a red hot real estate market for the last 24 months plus with double-digit levels of appreciation, historically low inventory levels, and historically low interest rates. Interest rates are on the change. What's going on in the real estate market in San Diego? I'm gonna go ahead and address that, show you some numbers. What are we waiting for, guys? Let's jump in. All right, the short answer of it is we're not really seeing a cooling market here in San Diego yet, and that's a big yet. We are starting to see some preliminary signs that the market potentially is gonna start cooling. However, right now it's actually kind of gone the opposite way. I always thought if we went to 5% on the interest rate that the market would start to cool off. We are at 5% now, but if you look at these charts here, San Diego County as a whole, we're almost at 107% of what the list price to the sale price is. So that means that properties are selling for, on average, 7% more than what they list for. So that's a huge number. If you look at some of the more affordable zip codes here, that number is even more. It's more like 111, 112%. So it's showing me, that's an indicator that buyers are feeling pressure to get something under contract now before interest rates increase. Now, already some buyers have been priced out of the market, but what they're doing is instead of buying in that preferred zip code, they feel like they still want to buy a home, so they're looking into a less ideal zip code, something that's more affordable for them, just so that they can get something under contract before the interest rates increase. Another indicator here, if you look at days on market, we're seeing the days on market decrease from the beginning of the year until now. Showings have ticked up. So buyer activity is still really strong, even with the increase in the interest rates. Now, the but was what I was talking about. I think this will eventually kind of dissipate, especially as interest rates increase even more. So I think that the market will start to cool, not tank or crash, but cooling in the respect of we're not going to see this red hot market that we've seen in the past, where we're going to see, 30, 40 offers on one property that just is like kind of an average property. I think buyer activity will kind of stave off. But again, as I mentioned before in other videos, the amount of cash that's in the market right now is pretty strong. So that's not interest rate sensitive, obviously. But I still think that they won't have to compete going so far over the list price. And we're already starting to see in some properties that have maybe a little funkiness to them, that buyers are just reluctant to make the offer on that property. They don't want to get stuck in something like that. So I think eventually we're probably going to start to see more of a flatline market, maybe something that the levels of appreciation are, maybe respectable of like 5 or 6%. The thing that I'm always looking at is the inventory or the supply element of things, and I'm just not seeing any like huge increase in supply because home sellers or potential sellers that haven't put their house on the market yet, they're not putting it on the market yet because they feel they have nowhere else to go. I mean, if they're to sell and buy a bigger house, it's going to cost them more money and they can't necessarily afford to make that move, so they're going to stay put in their house. I just, financing wise, everybody's pretty secured in getting a fully amortized loan. We're not seeing all this interest only teaser rate financing going on. So I'm just not seeing that inventory level increase so much that it's going to cause people to have desperation and need to sell because they're interest rate adjusted or whatever it may be. No, there may be some potential, like somebody becomes unemployed and that creates an opportunity because they have to sell. But I just don't see a big, huge market correction coming on. I do see some cooling, probably likely to going to be, sometime next year as the interest rates increase to, if we get to 7 or 8%, you can see it's going to kind of cost a lot more money per month. So again, these are all user specific. I think if you're looking to buy, this is still a great market to buy in, even though interest rates are higher than what they were, in the beginning of the year. They're only going to increase. Prices, I still think, are going to increase a little bit, just more of a trickling effect. But ultimately, that's going to cost you more in the purchase side and also on the monthly payment. if you're a homeowner looking to sell, I think that this is the market in which you're gonna get that strong demand, the multiple offers driving the price over what you even thought it was going to be. So this might be a good time to look to sell. If you guys have any more questions on your specific situation, feel free to reach out to me at 619-200-3236 or on the web at sdcoastalagent.com. Hey guys, thanks for tuning in. Make it a great day.